Patriot Nation, you're going to love this one. I'm going to show you some real transactions. I'm going to show you the last 3 transactions I've done, where in the first one, a home buyer that bought a home at $212,000 came out of pocket for $0. $0 at closing. That's down payment, that's closing costs, that's escrows, all zero. And I'm going to show you the next transaction. Somebody bought a house for $198,000 and they actually got money back. That's right, they got money back, $73 at closing. They got a check written to them to cover everything, down payment, closing costs, and escrows. And you say, well, that's all wonderful, great, Kevin, but there's no houses for sale in my area that much. Okay, I'm going to show you a transaction for $312,000 approximately, where the buyer only came out of pocket for $5,100. But normally they'd have to write a check for $26,000. I got it all the way down to $5,100 and some odd cents. Okay, I'm going to show you all that. I'm going to explain the strategy involved to get to that. It's a combination strategy that I use, and I'm going to explain it all. So let's kick off this rodeo right now. Hi folks, I'm Kevin Fagan. I'm the Mortgage Patriot on your side, nestled here in the hill country above San Antonio, Texas, serving proud Texans and all you great folks all around the country. So another great one today. You're probably going to want to share this with your friends and family because again, I'm going to go over my last 3 transactions and show you how I'm able to reduce cash to close, the actual figure you're going to write at closing, the check you'll write at closing. I'm going to cut that down to bare minimum and very acceptable ranges for larger cases. So as always, hit the like and subscribe if you would. It helps me really develop these YouTube algorithms and get my content out to you. And speaking of content, probably 9 months ago, I made this video right here. It's been my most popular one. Lots and lots of people have been watching it. Zero down FHA loan, where I show you how to combine strategies and try to bring your cash to close down to $1,000 or less. Well, I got a lot of comments saying that's just not possible. And I'm here to tell you with proof today that that is the case. So I'm going to show you 3 examples of where I did that, where 2 of those examples, the borrower actually at closing got money back. And another one where they only paid about $5,000 for over a $300,000 property when it's all said and done. Incredible. So let's get into all that content right now. I'd like to add clarity to 2 major points before I get into my actual examples of my recent closings. The first one is this. Closing costs consist of 3 buckets. I talk about the 3 buckets all the time. Bucket number 1 is your down payment bucket. That could be 3.5% in the case of an FHA, 3 to 5% in the case of a conventional, or 0% in a VA loan or a USDA loan. That's just bucket number 1. So even if you have a VA or USDA loan, doesn't mean you're not going to be writing a check at closing because you have bucket number 2, which is your actual transaction costs. There's lots of them. You have processing fees. You have underwriting fees. You have appraisal fees. You have inspection fees. You have survey, and you have recording fees. The list goes on and on. So all that can add up to quite a bit. And that's just bucket number 2. Bucket number 3, what is that? That is prepaids and escrows. Your property taxes and your property insurance have to be prepaid. Your insurance has to be prepaid 12 months, and your taxes and your insurance have to be escrowed to the tune of about 2 to 3 months each. So that's going to be a cost, if you will, for the 3rd bucket. So in other words, even if you have a VA loan, I say, well, I have a VA loan, I'm not going to be paying anything at closing. No, dead wrong. You're going to be paying quite a bit at closing if any of those 3 buckets need to be filled. The other point of clarity I want to make to you is this. This is not a loan program in and of itself. It is a loan strategy where I'm combining things. I'm combining down payment assistance with seller concessions. That's critical. Those 2 elements are going to play in all these situations. So it's not a loan program. I get calls all the time. People say, hey, I'd like that loan program where you get your cash to close down below $1,000. That is not how it works. We have to have things fall into place. Sometimes they don't always do it, but more often than not, if we follow my instructions pretty closely, we can get these things on track and you can bring that cash to close number, the check you will write at closing, to a very low and acceptable number. So let's look at all my examples right now and hopefully this will become clear. Okay, let me show you this first example because it's a great example of using a 0 down payment loan combined with seller concessions. So let me show you what I'm talking about. This is a USDA loan example, and it could be the same for a VA. Both of them are 0 down. In this example, which only happened a couple months ago, in May of this year, you can see that the sell price was $225,000. interest rate here. This is what a closing statement looks like, by the way, a closing disclosure. It's basically a tally of all the costs and all the information at closing. You scroll down to the bottom of the first page, it says closing costs, $10,699.42. But look at the cash to close right below that, minus $2,200. What does that mean? That means the buyer of the home didn't come out of pocket at all. They actually got money back. They got $2,200 back by using this loan and by using seller concessions. If we go to the closing cost number of $10,699, look at it, says here, includes $6,967.50. That's for bucket number 2. That's your transaction cost, see, and loan cost, plus $3,731.92 in other costs. What are those? Those are your prepays and your escrows. That's bucket number 3. So even though he doesn't have bucket number 1, down payment, he does still have to come out of pocket. But we managed through the use of seller concessions, which I'll show you right here. The final numbers, we got $5,731.67 in seller concessions. We were also able to get them to pay for the title policy and some other items of $1,950.75. So we gave them almost $7,800 worth of seller concessions, and we also got them to roll into the note the USDA fee. So at the end of the day, he got his earnest money back. He put down $2,200 ahead of time, and now he got that money right back at closing. So incredible. Let's look at example number 2. So here's an example using an FHA loan, because not everybody, of course, can qualify for a VA loan if you haven't served in the military, or if you don't live in a rural area, you can't qualify for a USDA loan. This is an FHA example using down payment assistance and seller concession. Let's see what happened. So the sell price on this one is $198,000. And I get it, a lot of houses aren't available at that price in the area, but let's just follow me on this one. As we scroll down through the closing disclosure, your closing cost for this borrower was $17,046.97. They didn't have $17,046.97. They had about $6,000 or $7,000. But look at the cash to close, what I was able to get it all the way down to. Look at the box that says $73.19. They got money back, has a minus sign there. The borrowers got $73.19 back at closing on closing this loan. How is that possible? And here's all your costs associated, as you can see there. Let's go down to the final numbers. You can see that we got seller credits of $9,500. That's what I helped negotiate for that. And we also got other adjustments here in terms of down payment assistance. You can see here a grant. We got $6,930 worth of grant money. So all told between that was probably about $17,000 worth of credits we gave him. So he was going to have to write a check for, again, $17,046, and he actually got $73 back at closing. Pretty incredible. And you can do the same thing. Can't always guarantee that, of course. Let me show you the last example. This is probably more realistic. Now listen, please, because if you're very interested in me trying to help you and lower your cash to close, then please comment in the comments section. I need to get your comments, and you need to tell me 2 things. Yes, you're interested, and where you're looking to buy. Please put, yes, I'm interested. I'm looking to buy in city and state area. Put that in the comments, please, and I'll be sure to follow up with you. We'll have a short conversation, and I'll be able to tell you what I think we can get you down to in terms of cash to close. So let's look at this last example, because this is more in line with the national averages for a first-time home buyer, about a $300,000 house. In this case, it's a $312,000 home in the Texas area. And if you go down on the closing document, you'll see that the amount of closing costs without any help at all was going to be $25,928.55. Buyer didn't have anywhere near that amount of money. So what did they end up paying at closing, writing that check for? $5,141.89. Not bad. How did we do that? In this case, again, we combined strategies. This was a FHA loan as well. So we used a down payment assistance program. For that, we've received, you can see their DPA funds, $10,937.15 for down payment assistance. And we also got seller credits, $6,955.85. And lastly, we also got them to pay for an owner's policy for the seller of $18,022. So all that totaled about $20,000 worth of help. So we took them from almost $26,000 down to just above $5,000. When you tell me that you're interested and what state and city you're in, just remember, if you have $2,000 to your name, you shouldn't be trying to buy a home. but we are going to combine strategies through the course of using down payment assistance and seller concessions and a very low down payment for bucket number one. What type of loan? We're going to bring that down as low. All three of those things are going to combine to minimize your cash to close. So I hope all this is of a major help to you. You can afford a home if you've got, reasonable amount of savings, but let's talk about it. Put that you are interested in the comments and what city and state you are looking to buy in, and I'll take it from there. So I'm Kevin Fagan, Mortgage Patriot on your side. Let's make it a great one.